This is Abhiraj here, broker with Remax Gold. I have been working as a real estate agent in the area of Peel and around GTA. I go all the way to the East End in Durham region and in London area as well at times when there is a need or we are servicing any clients. And just coming back from Wasaga Beach, there is a new listing that I'm bringing to the market next week. So I was just there to prepare. So without further ado, this is a great initiative that both myself and Akash, we collectively were able to put together, which is the home buying seminar. He helped me with getting the presentation ready while I was on the road. And I'll just dive straight into it. So, home buying is a process that is very exciting when you do it, regardless of which number of time that you are doing it, because looking at homes is considered to be on the list of top 10 most exciting things in totality. That's a study that has been found when people look at homes. That's why we have so many people just spending their Sundays and Saturdays looking at homes, going to open houses, even if they don't have to buy. But it is a very crucial journey and a very major step in anybody's life, whether they are upgrading, their first time home buyers. While they are making this big commitment and making this big decision, they should be aware of the whole process if they are the first time home buyers, and if they have worked with like a home purchase before. Even at times, like, you tend to forget and the trends change so rapidly. Some person may have bought a home like 20 years ago and things are totally different now. So I'll just quickly go towards the 8-step buying process and explain a little bit about how does it work. So in order to prepare to buy, there are certain crucial items that any individual would want to keep into consideration, and that goes in a kind of a flowchart way, which is, first of all, you identify a real estate agent like myself who you want to work with. Real estate agents have a job here to protect you from any kind of mistakes, any kind of hiccups that may come in the process of home buying, and also guide you throughout the process to keep your best interest secured, negotiate the best deal possible, and kind of educate you about the whole process as well as about the home, whatever they can, and what you can do in order for not making any mistakes as a home buyer. So that is the role of a real estate agent. Thereafter, once you have identified a professional real estate agent that you want to work with, you have to identify and make sure what is the price range and how you are going to finance your home purchase. There could be budget like anything else. People have budget for buying a vacation, a car, and similarly, it goes with the home. You have to see what your financing approval will be. You sit with a mortgage advisor. Your real estate agent can guide you and connect you with some financial institutions how to go by that process, because that is the baseline of your home purchase. Once you know how much you're going to qualify for, unless somebody was paying cash, and even if somebody was paying cash, they would probably have X amount of dollars that they want to spend to buy this home. So that is the part where you decide your price range. If you do not have cash to pay for your purchase, you end up taking a mortgage. Now, this mortgage has to come from a financial institution, and they base your approval based upon your income, your debts, and how your financial habits are in terms of your credit rating. So those are the things at a high level that your financial institution will consider before they give you approval. Say if somebody in today's market wanted to buy $1 million home with certain amount of down payment, anywhere between 5 to 10 to 20%, or even if you wanted to do more, the rest of the amount comes from a financial institution, and they will only allocate that amount or approve you for that amount based on few things, as I mentioned: your income, your debts, and your credit rating, which is your spending habits. Moving forward, once you have known that budget or the qualification that you can go with for purchasing your home, the next thing is you go and start uh, doing the home search. A step in between is basically which I skipped, which is requirements based on lifestyle and motivation. So when you go and look for a home, there are a few things. A, your liking. You may like a detached home, 3 bedroom, four bedroom, number of washrooms or whatsoever, based upon your family size, your future family growth needs. The next thing is your lifestyle, which is you want to be close to nature, you want to be close to parks, or some motivations like your you have young kids who are going to school and you want to send them to a particular school in a catchment that is having a good rating. So those are the motivations. Or your workplace, which is close by to the home that you're trying to buy, or the area that you're looking for, so you can reduce your commute. So these are the requirements based upon lifestyle that somebody will have to come up and take into consideration before they go ahead and proceed with their search. Now, this helps you identify that, okay, I want to buy a home in X neighborhood of Brampton or Y neighborhood of Mississauga. And the reasons would be your commute to work, your ability to purchase a home in the amount that you have been qualified for to buy in that area. And the next is like your personal needs of your family, which is daycare, schools for the kids, or university, or whatsoever it may be. The next, there is a little bit of a glitch in the slide, everybody. I apologize for that, because that's what kind of rerouted me. From 3, it goes, the arrow goes to the 6, and that's what I kind of got confused initially. But nonetheless, let's follow the numbers, which is number 3 was price, and number 4 was requirements based on lifestyle. Fast forward now, once you have the know-how of how much you can qualify for, and you know that what is the area, what is the driving force beside selecting that area, what kind of home that you want. Now that's when you go out in the field and you start looking at homes, and that's the exciting part. Because as I said, and I will dissect it in a moment, looking at homes is a very exciting thing. It's just like window shopping. You go, you look at homes you like or you dislike them, or you envision yourself in them, and then you move on to the next one. You prepare a list of homes that you want to go and see with your real estate agent. You go book appointments, and you make a list of what are the likes and dislikes about certain homes, and you narrow down which ones you would put in the top priority of consideration. Usually, it takes about 10 to 15 homes for an average individual, unless they have a is very specific and unique requirement to find a home. If such a specific and unique requirement is there, then it may take a little bit longer, because those opportunities or those homes may not be widely available. But if somebody has a reasonable and a very basic requirement of a townhome, a detached or a semi-detached or a condo even, which is 2 bedroom, 3 bedroom, 4 washroom in a certain area, I mean, there would be reasonable amount of homes to look at, and you can select some of them, go have a look, and kind of prioritize which one you want to proceed with. Once you have identified a home that you are totally in love with, that's where the contract or the purchase agreement comes in place. Now, this is a contract and agreement in binding, which is written by a real estate agent and is forwarded to the sellers and sellers agents, which they review, and that's where the negotiation happens. So if a home was listed at $1 million, and there are 3 or 4 critical parts of a agreement of purchase and sale. One is the price, the other one is the closing date, third one is the deposit that you want to put on the property, and fourth is the conditions. Usually the 2 main conditions that anybody is going to put in an offer is of finance and inspection of the property. I will not go into the details of it because we have some other topics to cover, but those conditions protect you, and depending upon the duration that you keep, 5 to 7 business days, you can secure a finance in that time and then comfortably waive that condition, knowing that you will be approved for purchasing this home, so that the deposit that you had given, the promised money, is not jeopardized. Second is a very important, crucial condition, which is the inspection condition. We do a home inspection unless it is already done by the homeowners and they have provided a copy ahead of time. You may want to go with a qualified inspector and inspect the home for its integrity, which is something to do with any leaks in the foundation, any mold, or any kind of structural or mechanical drawbacks, any plumbing issues that may be found, any electrical items that might not be up to the code. So these are the few major things that are usually discussed or rather reviewed by a qualified home inspector in a home inspection. And yeah, once all those things are satisfactory, as a buyer, you are able to waive those conditions and the deal becomes firm. And upon the date of closing, say if it is 2 or 3 months out from the day that you made that contract, that's when you will get the possession of the house. In between that, as I was mentioning, in those 3 or 4 items that are in the offer, the only thing that is majorly negotiated is the price. A home is listed at $1 million. Now, the comparable analysis of that home and the surrounding area, which tells us how much the homes in that area are selling for, based upon that, your real estate agent can advise you that what is the price that you should put your offer onto that property. And once you put that offer, say if it is $970,000 on that home, then the sellers might decide either to take it, reject it, or counter it back. These are the three things that will always happen in a negotiation when the offer goes in. If they take it, great. You got a home. The deal is firmed up, subjected to the conditions. If they don't take it, they reject it, they don't want to work, means maybe they are not motivated or they're looking at a number and they do not like the offer or something, which is the conditions in the offer. And last but not the least, which is usually the case, where they will counter it back by reducing the price, but a little bit higher than what you have offered. So that's how the negotiation takes place. And as I was already ahead of myself, and I mentioned, like, once the deal goes firm, say if today is March 17th and today we got a contract that was written, 5 business days of condition of finance and inspection. So probably next week by March 22nd, this contract will go firm. When I submit the offer, there will be a date which is 60 days out from now. So say March, April, and May. May 20th is the closing date. That's what we put in the offer. Once everything is tidied up and the offer is firm, the deal will close on 20th of May, and that's when the buyer gets the possession. And this happens through the lawyers, and there is a certain process. We can go into that process later on. But since this was the gist, or rather you can say the highlight of our presentation today, which is the home buying seminar, I wanted to touch upon the whole process absolutely in the best detail possible. And I mean, I will open it for questions now and then later as well, if you have any questions or anything pertaining to any of these 8 items that we have discussed. Go ahead if you have any questions, Akash.
Yeah, so with one of the questions that I had in mind, and this question comes from our participants also,
Right.
like working with a realtor, right? The second point. So,
Yes.
what are the key criteria for selecting the right realtor for your purpose?
Amazing. Great question. And I really appreciate you bringing that up, because uh, in in current times, in just GTA and Toronto Real Estate Board, which is the biggest real estate board of Ontario, it is about 70,000 agents that are there and that are active. Now, how do you identify who do you want to work with? Number one source of picking a real estate agent is reference. So, a friend of yours, a family member of yours might have worked with somebody in the past and they like their services, the way that they helped them, the way that they did the whole transaction for them, their integrity, their honesty, their transparency would be something that you may consider as a reference from them, because somebody has already experienced their services. It's just exactly the same way as we go for buying a car, but we are able to drive the car as a test drive. We could go to a showroom, we could drive a couple cars, different models, or we could try different brands as well. But with a service industry like real estate, it is not possible that you can test drive a real estate agent, fire them, and then move on to the next one. By the time you realize you don't like them, it's already too late in the game and you have wasted so much time that you do not want to waste further time exploring another one like that, right? So number one source of picking the agent, in my opinion, is reference. Now, me and you as two individuals would have probably different personalities, and it could be a possibility that the agent that was liked by my friend, which is you, is not going to gel in with me, because I have an analytical personality. You may be having an amiable personality and you kind of gelled in with that person. But me being analytical, this person is too soft for me and doesn't give me numbers and details, and I'm not able to understand why he's doing certain things which he's doing, right? So now the next thing is, even if I get a reference, I should be interviewing the agent and asking them about their home buying process, or if they have something that they can tell me or guide me, just exactly same way as we are explaining over here.
Yeah.
So a presentation by a real estate agent, that will make them understand their body language, the way that they handle your questions, your objections, and the way that they deliver the subject matter which may resonate with you, and that will make you comfortable, right? So A, you had the reference. B, you had the opportunity to meet the person without committing to them and interviewing them. It's exactly the same way. When people sell their home, they interview 2 to 3 agents before they go ahead and select the agent that they want to represent to sell their home, right? So as a buyer, buyers should also do the same thing, where they should go and maybe meet them in the coffee shop or in the office or wherever, and have that 15-20 minute, half an hour meeting where they ask the agent certain questions and encourage them to do a presentation for them on the home buying process. As simple as that. Now, without going in any further detail, so reference, interview, and then in the current times that we are living in, social media presence and digital presence of an agent is very important. So everybody is public in the service industry or otherwise. If we need to have like a um, house painted, at times people go on Instagram and look for painters in the area or painters in Brampton, and that's where they are able to see their portfolio, and that is an active portfolio. Yes, there is scams of all sorts, but there can be only so much that somebody can scam and fake. If you see live people talking to them, and there are addresses that are being posted that are secured or purchased or sold by this real estate agent, and then you see them their work in there, which is kind of a resume, that will give you an idea of what this person is, if you did not wanted to meet them up front, and if you wanted to check them in terms of the overall social media background or profile. The other thing is their Google reviews, or the reviews on Go Rate My Agent. There are several websites that are there which rate the agents, and this is some basic concepts, or you can say things that any buyer can do to pick an agent. I
Yeah.
hope that helps and answers your question.
Yeah. No, it does. No, thanks for that. So yeah, so let's keep going. And
Okay,
so
so since we are almost halfway through for our time and we started late, I have dedicated the first half to the home buying process, and we touched upon everything pretty much in as best detail as we could.
yeah,
Going forward, as we had certain highlights and topics that we wanted to talk about, which is the housing market overall, what it is looking and what it's going to project like in 2025. And this is what we see here on the presentation, that housing market outlook for 2025. The number of sales that we will clock at the end of this year in the 12 months span will be 76,000, which is going to be 12% more than last year, which was 68,000. And the question will come, why is that? The simple reason is, towards the first half of last year, we had interest rates going up, or rather just staying status quo.
yeah,
And then Bank of Canada from June onwards started to decrease the interest rates. And
right.
that's what kind of had a, you can say, dampening effect in the sales of last year. On an average in GTA, we record 70 to 75,000 sales year over year. COVID was an exception. 2 years in COVID, we recorded over 100,000 sales. But that's an average that we sit at. So last year versus this year, we will see a jump, because through January and through the second half of last year, we have been having interest rate drops, which is a criteria that fuels the sales and the real estate market. We have been having a lot of turmoil because of certain things, the geopolitical issues, which have been also playing their role, but we'll get to that in a moment. Now, the average selling price in GTA, that is versus last year, is up by 2.6%, which is good news because as the interest rate drops, the prices go up, but not significantly. Why? Because people have depleted a lot of cash in the past 2 years, and nobody is willing to go and overpay for any house because it is not a speculative market anymore. It is a need based market now. And the other thing is, all the inventory that has been created in the last 1.5 year is not being absorbed at the same rate. So when the inventory is high, the prices do not keep going up. They stay stable because the buyers ultimately are the ones who decide what the property is going to sell for. And if the buyers have so many choices, they have no reason to overpay for the property. And the last pointer on this slide, we have advantages of the first time home buyer in this year. So there are three main advantages. We have gotten the interest rate reduced by 2.25% up until now from the peak where it was. So that is a lower borrowing cost. Simply on $1 million mortgage, argument's sake, just for the ease of calculation, that's about $22,500 in 1 year. That is the less interest that somebody is going to pay. So 22,500 translates into $2,000 a month. That's a huge difference in terms of the borrowing cost. So that interest, when it gets reduced, your payments shrink. So if somebody was paying $5,000, now they are probably paying $3,500, out of which a good portion is going towards the principal, and still the interest goes out, but the principal is also getting paid. There is a CMHC cap that was for the longest time set at $1 million, which means, and I'll just do the abbreviation over here because some of the people might not be familiar. CMHC is an insurance company, which is Canadian Mortgage and Housing Corporation, that insures the mortgage which are below a certain percent of down payment. So if somebody was buying a home of $1 million and they were putting 10% down payment, so they were not getting 20% down payment done, because of which this deal had to be insured with an insurance premium by an insurance company, which is CMHC, or a couple more are out there, to make sure that the bank's money is protected. And this payment of the premium is upfront and it is a part of your closing cost. So about, say, like on $1 million home, if somebody was doing 10% down payment, they would be having give or take $23,000 of insurance premium added to their mortgage, which gives a pool of money to this insuring company. In the case of default, they're able to pay the bank so that their money is not at stake if the property prices were to drop. So that cap earlier was $1 million. Now that cap has been increased to $1.5 million, because as soon as previously people were supposed to buy a home of $1 million, not 99999, $1 shy of $1 million, they had to come up with 20% down, which is a whole lot of money. That's $200,000 of down payment. If somebody came to this country like 3, 4, 5 years and they were earning a reasonable amount of salary or whatever, for them to come up with that kind of hard cash, and especially in the current times that we are, it's very difficult. So then their ability to purchase a home beyond $1 million was totally impossible. They could only buy homes up until the dollar value of 99999, because they could buy them for a minimum down payment. Now that price cap being increased, now that is going to give them a little bit of flexibility. What happens is, if a couple or like a family unit is making $250,000 per annum as a combined household income, which translates probably into like a net income of $15,000 that they get after taxes and deductions, they are able to afford the monthly mortgage of $1 million, but they do not have the savings of $200,000 that they can pay the down payment. Now, that being said, though they were able to service the debt, but they were not able to buy the home of their liking or choice because they did not have that down payment. Now the case has been changed because now that cap is $1.5 million. So even if you liked a home that was 1.1 or 1.2 million dollars, you could buy it with minimum down payment of, it is a progressive way to calculate that, but give or take 10%. Amortization for first time home buyers and even on the insured mortgages has been made to 30 years. Previously, you could only qualify for 30-year amortization if you had 20% down, which gives additional 5 year to spread the loan. So approximately you can say 20% of reduction of monthly payment happens because of that. If earlier you were paying $5,000, when it spans over 25 years versus it being calculated for 30 years, that's a repayment cycle. So when a mortgage is taken, it has to be paid back to the bank in either 25 years, 30 years, or whatever. That's called the amortization. Now, this period being increased by 5 years would have an impact of reducing your monthly repayment by approximately 20%. So if there was 5,000 payment that was going out, now it will be 4,000. So these are the few things that will help buyers understand the overall landscape of 2025, how the year is going to be. In terms of the price increases, it will be very slow, or rather small percentages. In terms of the number of sales, it will be reasonable and as per the trend. And for the first time home buyers, there are certainly some advantages here. Any questions about this slide?
No, I think let's keep going, and there are some questions coming up, so maybe we can answer the question at the end of the
Okay, sure.
presentation.
Now, a quick review on the February Market Watch, which is basically, sorry, I had to turn the screen because I had it open on the other one. Every month, we have a report that comes out from Toronto Real Estate Board about some basic benchmark criterias. Hi, Raman. Thanks for joining.
Hi, Abhiraj.
So
Yep.
Raman has joined us. He's a mortgage broker, and he could throw some light when we go on to our what do you call, like, the mortgage section.
Yeah.
That's Akash, who has joined us and helped
Hi,
me
Raman.
prepare the presentation. And
Okay.
so
Hi.
far, it's just three of us.
I
So
see.
the quick watch on February 2025 Market Watch tells us, like, the benchmark price, the average across all sorts of categories of homes, which is basically condos, townhomes, semi-detached, etc., sits at an average of 1,084,547, which is an increase of 4.2% from January 2025. The average sales compared to January 2025 have gone up by 4.9%. In January, we had 3,800 odd sales, and in February, we recorded across GTA 4,037 sales. But if we compare it year over year, we are seeing a drop of at least 27%, because last year, same time, we had more than 5,000 sales, give or take. I'm just going off of memory, but we had a very harsh winter, and of course the subsequent effects of tariff being applied to Canada and whatnot kind of dampened the sentiments of people who were going out and purchasing homes. So that was one of the reasons why year over year it decreased, but from January it has been showing a little bit of progression. New listings, January versus February, have decreased because people were again not very comfortable putting their home out in the market in the time where it was so much snow outside. The curb appeal was not there. So if they did not list their home in January, I mean, they were just like month and a half away when the snow would have melted, and spring is considered to be the better and best time to list the home. So that's why we saw a decrease in February new listings. Average days on market. Now, it is no longer a time that we are living in where you put a home out in the market and on a Thursday or a Friday, and the following Monday it's gone. It's usually taking anywhere between 30 to 45 days for any home to secure an offer. The showings are not back to back. People are not lining up at the door, and it's basically one-off showings here and there, and then depending upon somebody who likes the house enough will put an offer. It will not be a multiple offer situation. So that's how the February outlook looks over here. And then, Raman, you joined at a very good time because we are just now about entering the slide of the rate cut impact, and we will
Right.
look to get your opinion on it. I'll just go through the pointers real quick. So
Sure.
we have got 7 consecutive rate cuts from Bank of Canada since June, as I was mentioning in the beginning of the presentation. March 12th was the 7th cut of 0.25 basis points, which brought the overnight interest rates down to 2.75 from 5%, which is almost reducing it by 50%, give or take, if you see. We are just 0.25 basis points shy of it being half of what it was last year, same time. The economists predict 2 to 3 more cuts by summer because they want to settle the interest rates as low as 2%. But today itself, we got news regarding the inflation, which was up at 2.6%, which has been hovering around 2. And that's what Bank of Canada's initiative was, to keep it under 2 or around 2. But it just bumped up, and they were forecasting it will stay like 2.1, 2.2, but it showed a significant uptick of almost, give or take, 25%. Is that correct? Yeah, give or take 25%.
Yeah.
Which was huge. And most of it was induced by the fact that all this drama that is being done around the tariffs is causing somewhat the inflation to grow. At the same time, we had a GST, or the tax holiday, in December and January, which brought the price, the CPI index, low because people were paying less for so many things, eating out, purchasing, and whatnot, all the necessary groceries and everything. The GST was waived. So it was expected that it will go up this time versus going down, but it went a little bit further up because of the tariffs being introduced. Reduced rates are expected to improve the affordability of the home buyers. Absolutely. I mean, as I said before, if somebody was having a mortgage rate before of 5% versus now they have 3 or 3.5%, or currently we are, I'll let Raman take away from here, whatever is being offered. I mean, if there is a difference of 2% on $1 million mortgage, it affects the interests by $2,000 a month. So, Raman, take it away and tell us something about what are the prevalent rates that are being offered by some of the A banks and some B lenders as well, in terms of the variable, fixed, 3-year, 5-year, etc.
Well, if I tell you the best variable rates available in one of the top banks is like, I would say 3.9. So
That
which is
will be
good.
prime minus 1.3.
1.3, close to, yes. And
No, sorry. The prime right now is 4.95, correct?
4.95.
After
And
the March 12th rate cut.
that's correct. Yes. So it's a good rate. After a long time, we are seeing this, right? Because people who had a variable mortgage, their interest rate went up to close to 7%.
Absolutely. Absolutely.
So people who bought the houses and got the mortgage around 2021, they got prime plus rate. So they've been
Right.
seeing this high rate lately, but now it's a big relief for them. And of course, for the first-time home buyer and the new buyers, they are our recommendations for them are, Abhiraj, that to go with variable. And like you said, there are expectations of at least
At least 2 to 3 more cuts.
Exactly. So more cuts. So because as we know that we can change from variable to fixed mortgage at any time, but it cannot happen like other way
The
around,
other way around. Yeah.
right? So
Once you're
yeah,
in fixed, you have to pay a heavy penalty to get out of it and whatnot, right?
that's correct. So the rates, on the other hand, fixed rates are higher. If you see right now, banks are offering fixed rate a little bit higher than what they are offering for the variable. So I
What
actually
is the 3-year fixed being offered right now on 5-year?
3 years. some banks, like major banks, are offering like 4.2, something like that. Yeah.
Okay.
4.2, 4.25. Some banks would. I mean, again, Raj, like mortgage agents who works with the bank, I would call them mortgage specialists. So if they want to keep the client and it's a very good client, they will let go their commission to beat the other bank's rate, right? Some part of
Okay.
it.
So
So
that's a good insight that there is discounting that can happen at the financial advisors level as well. Okay.
that's correct. So there are at some points, beeps, they can get reduced by letting go some of their commission from
At their discretion.
yes, true.
Okay. Great. Well, thank you so much for adding that to our presentation, Raman.
Yeah, most welcome.
Moving on to the tariff impact on real estate, I mean, there is something or the other that will keep on happening in the world. We cannot predict that what exactly is going to happen, when it will stop. We had worse things that have happened in the past. Uh, COVID was one of the primary examples. We are still
Mhm.
not able to forget, rather, like not even totally out of it, with the long lasting impacts that it left on the society, on the psychology, and overall the world. But tariffs is something that are certainly going to have their impression, but how it will directly translate into the real estate is a lengthy topic. Overall, what we can say is the cost of building, because the tariffs are being discussed about on lumber, on steel, on aluminum. All these materials are being used in construction. So if
Mhm.
there is a cost that goes up on these items, I mean, it is inevitable that the cost will go up on the construction. And when that happens, it will be automatically translated into home prices being higher. The uncertainty in the market kind of leads to speculation, where people will be not interested in buying, and then the sellers will struggle to get top dollar for their homes, because people are afraid of losing their jobs, businesses are suffering, their incomes have reduced, they are doing layoffs. So I mean, that kind of looming threat, because at the end of the day, the source of income from a household relies on how well their business or wherever they are employed uh, is happening. And once that get jeopardizes, the overall sentiment. I have had few buyer clients that I have been working with. One of them is in construction, and he said, like, I'll have to wait to put an offer on this property because my boss is on vacation. He has been with the company for 25 years, but he is scared. And he said, like, I'll have to have a word with him before I take this step, because he is in his late 50s. He can pay all cash for a property, but he wants to make sure that he's conservative in the purchase that he makes, so that he leaves some money reserved for themselves for a rainy day, just in case if he was to lose his job. So that is the mindset that is brewing. It's not like, okay, let me take a line of credit at 1%, let me pay a little bit extra here, or even if I take a mortgage of 50,000 or 100,000 more and get the house at a great price, I will fight for it. That all has gone out of the window, and it will stay there for now, right? One thing that happens in the uncertain times as well is opportunities do come up. There could be a seller, or there could be somebody who has to sell, and the inventory is putting a downward pressure on the price. The sentiment in the market is putting downward pressure on the sales are not happening, but this person has to sell and go out. Either they are liquidating, leaving the country, moving out to a different province. Now this person would do whatever it takes to sell their home, and then keep on reducing the price to make it attractive compared to the other people who are selling the home in their area. That's when there is an opportunity for a buyer who can grab that home for a price that is significantly low, or still a discounted price compared to the other homes in that area. So anybody who is looking out there should look out for these opportunities as well. And through this uncertain period, you can always call me and connect with Raman. Raman can share his number later on to discuss about the equity that you may want to take out from your home to invest somewhere, as I was talking about opportunities, or what are your options if you had to enter the market to buy for yourself. And working with professionals always give you that right approach and opinion. Okay. We are almost through the presentation. Any questions that we have, we can address that, or I mean, we covered pretty much all the things that we had on the presentation. Go ahead, Akash, if you have anything.
Yeah, let me see if we have any questions. Just one sec. So one of the questions was related to the down payment. So
Right.
usually people, they aim to get like 20% down payment, right? But and some people kind of hold their decision to buy because they don't have accumulated that 20%. So let's say they are at like 15% or 12%, and they want to wait another year or so to accumulate. So is it a good decision to wait and accumulate 20%, or is there a way in which they can proceed and make a purchase with lesser down payment?
Okay. I'll let Raman, you take this question, and then I'll give my feedback as well later on, because you joined late. I answered a lot of questions earlier. Since
Okay.
you are well versed with this concept, because people come with a lot of questions regarding, okay, I have this much down payment, how I can get the mortgage, or should I wait to collect X amount of dollars? So go ahead, give your feedback on it, and then I'll take my turn.
Well, Akash, it totally depends on the person's choice. Like what I would suggest, if a person is living, is renting a place, right, and he's getting a very good deal, he don't want to lose this house, right? It's a cheaper deal, and it's getting what he's looking for. And I would recommend that to go for it. Don't wait for another 5 or 7%, whatever he's shortfalling for 20%. Get approved and go for it. But if they are just not 100% sure, or they want to move, they are ready to buy a house, then they may wait for the perfect opportunity. But if like Abhiraj mentioned, like some people are desperate to sell their house for whatsoever reason, uh, those deals are, you can't afford to lose those kind of deals. So Abhiraj, we come across so many people. Some people are defaulting on their mortgages, right? It's not a very good time for
Or
seller.
banks have taken their homes, and it's a power
Exactly.
of sale situation.
Yes, we
So
actually, being in the industry, we have access to those properties as well. We have some private lenders who are, the borrowers are behind their mortgage payments, so they are willing to list those properties, and they ask us if we can, sell or buy those properties without putting into the market. So we
right, the
have
off-market
options to
deals.
go that track as well.
Makes sense. No,
Good point.
thanks, Aman.
Yeah.
A segue from Raman's point, where he said, like, if you're getting an opportunity and if you're getting a deal, so say if that home was worth in the fair market value $1 million, right? But somebody is willing to sell it for 100,000. Argument's sake, sorry, 900,000,
900.
$100,000 cheaper. Now, if I'm that buyer who's waiting for 20%, let me do the math quickly. I am paying 20,000 less down payment, because now this home, because I wanted to do 20% and I was short by 5%, for example. I am getting a home that is $100,000 cheaper, so I will be paying $20,000 less in my down payment. First of all, my mortgage will be reduced by $80,000, which translates, give or take, into $400 per month.
Yeah.
So if I ended up buying a house for 15% down payment, what are my financial implications? The CMHC fee, which is going to be, say, $18,000. If I compare it in terms of not the saving, but the dollars out of the pocket, I saved the 20,000 that I was supposed to pay extra
Yeah.
for my down payment, and right now I am short $50,000, and then I reduced the mortgage as well on a monthly basis by $400. Now the only effect that it made to me was taking a debt of $30,000 more compared to if I had that extra 50,000. Are you guys able to follow me?
Yeah.
Yes.
Yeah.
If I had 200,000 and I'm short 50,000, but the price is reduced by 100K, I'm anyways able to bridge that gap of 50 by 20,000 because I have to pay less 20,000. And then the 30K is what I have to probably, I'm not able to come up with, is what I have to carry as an additional debt. But at the same time, that additional debt is much lesser because now you're paying $80,000 less on the mortgage because your house price is $100,000 less. So you have to see it in this way as well, that at the end of the day, financially, on a monthly basis, on the down payment basis, you are winning because you are buying a home which is $100,000 cheaper. So there is no point waiting, because if you miss this deal and the market keeps going gradually up 5% year over year, you will be chasing that by collecting your 50,000 in order to save that 18.
Makes sense.
I hope
No,
it makes sense.
thanks.
And I would like
Yeah.
to add one more thing. So there's Akash, there are two types of mortgages. Like if it's less than down payment, if it's less than 20%, those are insured mortgage. Of course, as like the name says,
Yeah.
CMSC insured. But if it's above, we are doing 20% or more down, that becomes conventional mortgage, right?
Yeah.
So conventional mortgage rate is slightly higher than the insured mortgage rate. So
I see.
you are saving on that side as well.
Oh, okay.
So it's
Yeah, I
always
didn't know
win-win
that.
situation.
Yeah.
Yeah, it
Yeah,
is.
that's a very useful insight. Yeah.
Yeah.
Great point, Raman. And one last point I'd like to make is when you do that and you are grabbing that deal, and if you are collecting that 30,000 or 40, 50,000 in about 6 months to a year time, you can still collect that and pay towards your mortgage to reduce your payments, because you are able to pay lump sum of 20% every year of your outstanding balance.
Correct.
Am I correct, Raman?
Yes.
Yeah.
So, I mean, you can arrive there. The only stake is you will be doing the CMHC side, but then you have a lot of savings as well.
That's great. Okay.
Amazing. We
Yeah,
are
so I
almost at the
think
top of the hour. We finished,
Yeah.
we started late, but we finished on time. I think it was a great experience.
yeah, it was great. It's a good beginning, and I guess our audience will have get a lot of benefits out of the discussion that we
Absolutely.
had. Yeah.
Absolutely. And even like the people who are not able to join or not able to get on the call, once we post this on YouTube or other social
Yes.
media platforms through the short forms, I mean, there's a lot of nuggets to take it from this presentation.
Yeah.
All right. Thank you, everybody, and have a great evening. We'll see you guys on the other side. Take
Yeah.
care.
Okay.
Thank you. Thank you, Akash. Thank you,
Bye
Abraj.
then.
Thanks, Raman. Bye.